We have a very important update for all Tesla stock investors. Here in this video, we're going to get into all of your Tesla stock news, a Middle East crisis update because things are escalating at a rapid pace that you simply cannot ignore if you are an equity investor. We're going to look at Tesla options on Friday, how option buyers are positioning their positions in Tesla. We're going to look at Tesla on the charts as well as some other charts just pertaining to the broader markets. What do these historical charts suggest is going to happen to the markets throughout the next couple of weeks and the next couple of months? We have a lot to get into in a very short amount of time. Hit the like button if you own Tesla stock, if you are buying the dip in Tesla stock, as well as subscribe to the channel if you guys want to stay up to date with what's going on with Tesla every single day, as well as the broad markets. A lot of people forget there's two things that move Tesla, that move your portfolio. It's Tesla stock news, and then it's broad markets. What are the markets freaking out about on any given day, or what are the markets excited about? Those things have probably a bigger impact to what moves Tesla, or how Tesla moves, than even Tesla news. So let's start with the option flows on Friday and the positioning in Tesla stock. And over the past multiple days now, you have seen some of the largest days for Tesla options that I have ever seen. There is a lot of money flowing into Tesla options. On Friday, you had $1.48 billion worth of option activity with a positive order value of 29%. Although Tesla stock was up, including the move in after hours, about 1%, the option activity was quite bearish, and it seems like you're getting some hedging for 2024. On Thursday, the option activity was even worse. You had $1.81 billion worth of option activity with a positive order value of 15%. And over the entirety of last week, you had 5,109 orders totaling $10.13 billion with a positive order value of 51%. It's important to note, this option activity, it's not retail investors. This is hedge funds, institutions. These trades are worth hundreds of thousands of dollars or hundreds of millions of dollars. Your trades do not get flagged in this data. So the number is actually higher than what we're saying for the total days option activity, but these are just hedge fund trades. And as you can see, you are pretty neutral for the past week, which is surprising considering the amount of carnage you've seen in the QQQ and the SPY last week. This is actually what I would say more positive than not for Tesla stock, but this is not too uncommon to see longer term hedges getting placed on a stock heading into a new year. It's very common. So if we take a look out to next week, this is going to be next Friday, November 3rd, 2023. You have open interest on the call side of 55.62% with open interest on the put side of 44.38%. You have a put to call ratio in terms of open interest at 0.8. You have a put to call ratio as far as volume at 1.22. So what you've seen on Friday was volume on the put side of 55%, volume on the call side of 45%. So the volume on Friday was pretty skewed towards negative for this upcoming week with Tesla stock. But if you look at the total numbers, you're still pretty positive. And a put to call ratio of 0.8 is much better than what you're seeing on the S&P or the NASDAQ, which has a put to call ratio of roughly 1.2 to 1.3 on any given day. So Tesla, dollar for dollar, pound for pound, is actually seeing more bullish inflows than the broader markets. And specifically, there's a lot of volume at the 220 call. On Friday, you had about 49,000 for volume versus the open interest of 22,000. But on the put side, at the $200 put, you had open interest of 8,600 on Friday with volume of almost 33,000. So people are betting that you're either going to break above 220 or you're going to break under 200 this week. So options are implying quite a big move. Before we get into all of your Tesla stock news that you need to know, potentially one of you guys are actually going to win a Cybertruck. I think that's pretty exciting. We'll give you details on it here in this video. I do want to look at a couple charts in pertaining to the broader markets. This chart shared to us by Jason Shapiro. He says, what? And it's a little confusing to understand. We're going to break it down here in just a second. But the biggest comment, the main comment under, he says, I'm confused. Can anyone explain to me why this is scary? Is it because specs are getting less short while the market declines? And Jason Shapiro says yes. So when you actually look at this chart and you look at the dates down here, you'll see that obviously some of commercials is the red, some of large speculators down here in the blue, and the sum of small speculators in the yellow. Small speculators are like your retail investors. Some of large speculators would be like hedge funds, institutions, large money. And the sum of commercials would basically just mean everything. And if you look at the dates, back here in 2022, you've seen your speculation increase on basically everything, the red and the blue. And you continued higher through September. And then you actually started to fall during the lows of October. That's normally what you would expect to see. Now, in 2023, ever since May, you have seen the speculation actually falling heading into this. So this suggests that maybe we haven't even seen that downside yet. People are not fearful. Typically when markets bottom is when everyone is expecting the worst. When everyone is bearish, that's usually when you get that reversal and stocks start to move higher. You're not even close to that right now. This chart I also think is notable to point out. You have the S&P 500, and then you have the S&P 500 equal weight, the year-to-date change as of October 25th. And this is looking at 1999, 2018, 95, 2020, the year, 1990, 1998, a bunch of different years. And you're looking at the spread between the two. And the S&P 500 is up about 9% still year to date. The S&P 500 equal weight is down 4.15%. This is the largest spread that you have seen. It's basically showing you that most stocks are actually negative year to date, but the index has done relatively well just based on a couple different names. And you guys pretty much already know that. The spread is 13.19%. Now, what's interesting here, if you look at other times in history, like the 90s is a good example. I mean, you were down big time for the S&P and for the S&P 500 equal weight. The spread was 10%. 10%. Well, you ended the year with the equal weight going up 7.88% and the S&P 500 going up 4.91%. Suggesting the last 2 months or so, November and December, can be pretty strong years if you have a really, really wild spread. Same thing for 98. You had a spread of almost 11, and your S&P 500 equal weight ended up rallying 11% in the last 2 months of the year. And your S&P 500 ended up rallying about 14.81%. It closed that spread down to about 3 or so, about 4, right? So you reduce that spread a lot. You reduce the spread again. Back here in the 90s, the spread ended the year at about 3%. So you were declining about 7% worth of this spread. That means that either the S&P 500 from here is likely to fall heading into the end of the year, and maybe the S&P 500 equal weight doesn't fall as much and you close that spread, or potentially the S&P comes down a little bit, your equal weighted S&P can rise and also narrow that spread. In English, if that didn't make any sense, this means you're probably going to see the indexes more so align towards the end of this year, whether it's negative and you get a, more negative S&P to match the S&P 500 equal weight, or you just get everything starting to align a little bit more. This could mean if you're an investor in Tesla or you're an investor in other stocks that are not the biggest stocks on the S&P 500, you might start to see some gains towards the end of this year. Let's now get into all of your Tesla stock news you need to know today. Tesla has launched a Cybertruck delivery event shareholder lottery. Quote, "To maximize fairness, we are conducting a random drawing to determine shareholders' eligibility to attend. The deadline to enter the drawing is Friday, November 3rd, 2023 at 11:59 p.m. We expect to begin communicating selections during the week of November 6th, 2023. And to sign up, all you really do is go ahead and click on the link and verify to attend. And then you obviously have to put in your sign in, but it's as simple as that. And it does look like thousands of additional new Highlands are arriving in the Barcelona port. And this is from Luck Waterlot over here on X. And you can see a big old ship with a bunch of Teslas. The UAW has reached a new contract agreement with Stellantis. The deal includes a 25% hourly pay raise plus cost of living allowances over the more than 4-year contract. Stellantis also agreed to concessions on job security, including keeping an engine plant open in Trenton, Michigan, and building a vehicle in the company's idled Illinois assembly plant. We'll have to see if this ends up being a positive for Tesla stock, or if Wall Street will look at this as a negative. It's hard to say. We've seen very little correlation between the UAW strike and Tesla, even though what we've heard from GM and Ford earnings is they're really not trying to compete with Tesla anymore. They're canceling their plans to build $12 million of EV manufacturing. That was Ford's announcement. GM said they're canceling their plans to build joint EVs with Honda and GM worth about $5 billion to try to get lower priced models out there to compete, quote, with Tesla. They're canceling that as well. They realize after these deals they cannot compete with Tesla, and that's obviously going to be a positive for Tesla. Although we haven't seen Tesla stock react to it. Once the deals are actually finalized and the strike is over, that might become a positive catalyst for Tesla stock. We'll have to wait and see. Obviously, no guarantees, but I could see that as a possibility. Here's a chart from Roland Percher over on X. It's China retail car sales January to September, and you have your year-over-year numbers as well. If you look at number one, it's BYD up 61%. That's very impressive. If you look at everyone else, like a Volkswagen, that's down 1%. Toyota's down 9%. Honda's down 22%. These other, Chinese local brands you've probably not heard about, they're up in between 10% and even negative 17%. BMW's up 5%, Mercedes up 5%, Audi up 3%, Nissan down 26%, and then Tesla's up 36%. So Tesla is actually, doing one of the best here in China. The biggest thing this chart really highlights to me is just the scope in which Tesla will be able to grow in China. Tesla is what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12th. Is in 12th place as far as overall car seller on a volume basis. Tesla sold less than 500,000 cars in China this year. And BYD has sold almost 2 million. There's a lot of room for growth with Tesla in China. And here's a chart of U.S. car sales by model January through September. So this is looking at the U.S. And if you look at the Ford F-Series, that's up 23%. That is the best-selling model over here in the U.S. And then you have the Chevy Silverado, that's up 8%. Ram pickup is down 8%. Toyota RAV4 is flat year over year. And then the Tesla Model Y is seeing the strongest growth by far. That is up 87% year over year. So it looks like that's probably going to continue. And even then, there's still a lot more runway for growth in the US as well. And this chart is China retail sales January through September, but only looking at specific models. And if you look at specific models alone, Tesla's Model Y is in #1 place, up 46% year over year, selling over 300,000 vehicles. The next highest selling model is the BYD Quinn Plus, and they have sold a little bit less than 300,000. Tesla's technically around 330,000 or so for the Model Y. So you do have a little lead here on the BYD Quinn Plus. And this just shows, again, the adoption of Teslas in China is happening. And it's happening quickly. And what a lot of people are missing as well, we covered this here in yesterday's video, but if you also missed it, it says Tesla stock is rising on higher EV prices. Ford is helping too. Ford raised their price of their F-150 model lineup for 2024. And Tesla also raised prices on Friday. It says, Friday, Tesla's website showed something investors have hoped to see. The starting price of a long-range dual-motor Model Y is now $48,990. That's up $500. The Model Y is the company's best-selling vehicle. Tesla also raised the price of its Model X Plaid Edition by $5,000 to $94,990. That means that they must be seeing some really good demand, because even now, this higher end variant, it didn't qualify for the EV tax credit anyways, but now it's even further from qualifying for that EV tax credit, and that is any vehicle under 80,000 with like 90% of their parts and manufacturing done here in the US. So that's a good sign as far as demand's sake for Tesla. And just overall, Tesla raising prices is going to help that bottom line. That auto gross margin is going to be benefited from Tesla actually raising prices. This, I think, is one of the biggest checkmates to all of the shorts, all of the bears coming in 2024. I think it's clear. We're not going to get more rate cuts in 2024 unless inflation somehow veered its ugly head higher, which that doesn't look likely. You're going to get rate cuts. That is next, and it's coming. Probably more so than the Fed would admit to you here today. So what does that mean? Well, Elon made it very clear on the earnings call. It's all about the monthly payment. If a Tesla was $100,000 with a $500 a month monthly payment, well, okay. Or if Tesla's $50,000 with a $500 a month payment, consumers don't care because their monthly payment is the same. I'm sure they care a little bit, but if their monthly payment's $500 either way, that's all they care about. Whereas Tesla loses on that top line difference. And that's what Elon made it very clear in the earnings call they have been striving for, to keep those monthly payments lower. So as the Fed funds rate has just continued to go higher, to maintain a roughly similar monthly payment price, something that is affordable, Tesla has been forced to lower prices. I don't think it's necessarily a demand issue for Teslas that people just don't want Teslas. That's obviously not the case. It's the best bang for your buck. It's the best tech you can get. One of the safest vehicles you can buy by far. It's just that monthly payment would be way too high if the Model Y was still $65,000 on average. You'd be paying like $800 plus a month to get your hands on a Tesla. Not everyone can afford that, especially when your real inflation has been so high over the past 2 years. A can of freaking baby formula that I just bought the other day was $20. Tiny little can. I can fit my hand around it. And you used to be able to get a big one for $20 during 2020 when I had my first daughter. Like, that is just, the cost of living is insane. Nobody can afford the monthly payments if Teslas were at their pricing in 2021 or 2022. That's why Tesla's been lowering prices. When the Fed does start to cut rates, Tesla will raise prices. And that's going to help Tesla's margins big time, whereas nobody's really expecting that. That's like in nobody's cards for Tesla in 2024. And I think that is something you really want to be considering heading into 2024 in your analysis with Tesla stock. I think this does make Tesla a lot more attractive heading into the new year because unlike other big tech names, your quote unquote, your safety trades for 2023, it's been an Apple, it's been a Microsoft, it's been a Google, it's been an Amazon. These are companies that don't benefit nor get hurt from the Fed raising rates. Nobody stops advertising on Google because the Fed funds rate is going higher. That might actually cause people to advertise more. Nobody decides whether or not to buy an iPhone, whether or not rates go higher or lower. It's not a heavily financed item. They're relatively cheap compared to a Tesla or compared to a house that 90+% of people finance those things for. Again, cars and houses, about 90% of which that are bought are financed on. About 95% of houses are financed. So those big tech companies, that's been the obvious hideout. They haven't been affected by rates going higher. Whereas something like a Tesla, small mid-cap stocks that are heavily dependent on where Fed funds rates are, especially your small and mid-cap stocks that are basically zombie companies, they have not been able to refinance debt, to raise capital, to do anything of which they've been used to over the past 15, 20 years now. When the Fed starts to lower rates, your big tech is no longer going to, be that safety trade, that beneficiary, if you will. If anything, they've been benefiting because they've had 50, 100 billion in cash. They've been collecting billions every quarter in just free interest off of that money. Small cap stocks can't really say the same. Tesla has been collecting about $200 million over the past multiple quarters, but the net drag on Tesla's business has been way more than what that $200 million or so is worth every quarter. So Wall Street heading into the end of this year is going to start looking at the markets a lot differently. Instead of saying, hey, where can we hide out because we're probably going to get more rate hikes, markets are going to start to say, hey, who's going to benefit from the Fed lowering rates? And that is, again, your small, mid-cap companies, and specifically a Tesla. And I really like Tesla for this simple reason. Tesla has similar qualities as your big tech names. They're self-financed. They don't need to raise capital. They have very low debt ratios, virtually no debt, $26 billion of cash now. When the Fed does lower rates, Tesla is an obvious beneficiary, and it's safe relative to other small cap companies. So I think a lot of Wall Street money will go into Tesla. Even consider Tesla is one of the most under-owned big tech stocks out there. In fact, it is the most under-owned big tech stock out there. Out of the land of big tech, only about 30% of hedge funds and institutions have any exposure in Tesla whatsoever. That's compared to 90+% having exposure in an Apple or a Microsoft. It's just under-owned. There's a lot of room for people to start buying some more Tesla. And I do think that is a big reason why Tesla stock likely outperforms towards the end of this year, the last couple of weeks of this year, and heading into 2024. Not to mention when the Fed actually does start to cut rates, Tesla is likely to really outperform and could make you a lot of money if you are positioning for this right now. Now let's look at some of these charts. TLT on Friday was down about 0.5%. That means yield on your 10, 20, 30-year treasury did go higher a little bit on Friday, but you're still off of your low back here. We could pull it up on a percentage basis. You're still off of your low by roughly 2.5%. So that's good. You don't want to break to a new low. You want to see investors start to buy bonds, drive some of those yields down lower, because even before the Fed does cut rates, if you can get TLT to rise from here, that is going to help Tesla. That's going to help financing become a little bit more affordable. If you look at oil was a big winner on Friday, up all in all about 2%. This is because of this Middle East crisis. If oil does go higher, if this Middle East situation does get worse, and let's say theoretically gas went back to $5, $10, $15, $20 a gallon because The Middle East wants to cause economic pain over here for maybe, supporting who, not getting political here. Well, if gas hit those kind of prices, it would be logical that a lot of people would start looking at EVs a little bit differently. They would start looking at them a lot more favorably, especially, again, due to the amount of money you would almost instantly save. Even though gas prices can go up and down, people think when gas prices go up, they're going to stay up for a long time. So that should help Tesla sell more vehicles, let's be honest. And probably at that point, if gas prices were that high, the Fed would probably have to cut rates anyways. Now, something else that could happen in 2024, that's probably likely to happen, is the dollar coming down. If the Fed does cut rates and becomes more accommodative to the economy, the dollar's probably going to go down, and that's going to help out company earnings. A company like a Tesla that takes in, foreign currencies from, China, the yuan, the yen, from Japan, the South Korean dollar, that takes in euros, takes in all kinds of different currencies. The higher this chart goes, the less those foreign currencies convert back to US dollars, right? Because if you're a Tesla, you report your earnings in US dollars. You have to take in your foreign currency and convert that. And if you look at this chart, it's no wonder, stocks were doing so well in 2021 and really towards the end of 2021. Look at the dollar. It was trading at way lower prices it was even at before the Rona. So you were getting a lot more dollars back for your foreign currency. And then it's no surprise why stocks did what they did during 2022, because look at the dollar. I mean, this was about a 20% hit to earnings just because the dollar, right? That's pretty rough if you are a multinational company, in which a lot of your biggest companies are an Apple, a Tesla, a Google that has advertisements everywhere, right? That does business in foreign currencies. They don't benefit off of this. 2024, they should start to benefit from that. Now, if you look at gold, this is probably one of the most troublesome areas of the markets that you can point to, because gold is breaking out. This is showing a lot of fear is out there. If gold continues higher, then that's going to be a sign that stocks are probably going to catch back up. And that probably means you need to see a lot more downside the higher gold goes. So the higher gold goes, the more likely you are to see some big downside in our markets. On the charts for Tesla, you're sitting at a RSI of 28.78. That means you should be bouncing here. And that's what I expect to see happen. If you don't bounce, then you start to get into really, really oversold levels, and you just normally that doesn't happen with Tesla. Besides back here in January, normally you do bounce around 30 on the RSI. So I'm expecting that to happen at some point here in the near term future. Now, for 2024, I do think Tesla is probably going to retake its all-time highs. If your auto gross margins go back to over 20%, if you do get rate cuts that, help boost the demand for Tesla, if you do get a successful launch of the Cybertruck, and maybe Tesla gave you a gift on the last earnings. Sure, it temporarily hurt Tesla stock, but Elon made it clear that the Cybertruck's numbers are going to be really bad. The price is probably going to be high. The expense to build these is probably going to be really high. The margin is probably going to be terrible for the next 12 to 18 months. What if it's only bad for 6 months? Then investors have priced in way too much bad news for the Cybertruck. And maybe the launch, the ramp, is better than expected. Maybe you have an even larger halo effect than expected. This would really help out Tesla stock. And then not to mention, when rates come down, Tesla actually raises prices. That's like the cherry on top to getting back to all-time highs. Plus, when the Fed does raise rates, it hurts your multiples. It makes stocks less attractive. When the Fed cuts rates, it allows for some multiple expansion, and that really comes down to treasuries, right? You look at stocks a lot different when treasuries are giving you 5%. Treasuries are giving you half of 1%, then it's easier to value Tesla at 100 times PE. If treasuries give you 5%, then it's harder to value Tesla at a 50 times PE. And as Gary Black says here on X, quote, when Cybertruck comes out in a few weeks, it will be the biggest people magnet vehicle we've ever seen. wherever Cybertruck goes, people will surround it, take selfies of themselves on it, next to it, and attached to it, and post them on social media for all the world to see. If you can't see that Cybertruck will spark a huge halo effect of interest in the entire Tesla franchise, unlike any vehicle we've seen in years, you're not thinking clearly. And I think that's just the best way to put it. If you love it or hate it, doesn't matter. It's going to get a lot of attention, and that's going to drive a lot of attention back to Tesla. In terms of the charts, you're below your 200-day moving average. If you really want to see a, pop from here, a rise from here, you need to get above that. That is sitting at $217.02. I don't exactly think that's going to happen. Now, you do have a lot of catalysts coming next week, in which we'll get into more in the next video. I don't think an upside move is likely from here. You do have Apple that reports earnings. Their earnings are probably going to be pretty bad if I were to imagine. Apple does have an event on Monday in which that's the speed event. I can't remember exactly what it's called, but typically when Apple has events, Apple sells off. It's usually not a bullish event for Apple. So just going off of history, if that happens again, you're probably going to get more downside pressure on our markets, and that's just not going to help Tesla rise from here. So I do think it's almost certain Tesla's probably going to fall to 180, 190. You're probably going to get a better buying opportunity than we are seeing right now in the low 200s. It's a pretty marginal difference. Whether you're buying at 207, whether you're buying at 190, it's not going to make the biggest difference in the world unless you're piling, tens of thousands of dollars into Tesla right now. If you're just dollar cost averaging, right now is a great time, in my opinion, to be buying Tesla stock. But 180 looks pretty certain. If you get down to 150 or under, that's because the markets are in a really bad spot. And I think that it's possible on the index basis. And that's what Tesla basically moves off of. If you have a bad Fed next week, bad earnings, we're obviously having a bad Middle East situation, it's possible that Tesla stock could fall to 150, and that would be, as I've said many times, a sell your kidney kind of moment to go long in Tesla stock, or at least that's the way I'm thinking of it, and that's the way that I would be positioning in Tesla at those prices, guys. So that is going to go ahead and do it for this video. That's everything you need to know as far as Tesla specific news. We are going to, like I said, get into more of your broader market events over this next coming week at 9 p.m. tonight, and how this could affect Tesla stock. So you guys definitely don't want to miss that video. Hit that subscribe button and the notification bell if you maybe want to be notified when that video is put out, just depending on if YouTube actually sends out notifications or not. But no, 9 p.m. sharp tonight, Eastern Standard Time, that video will be coming out. Do not miss it. In the meantime, enjoy the rest of your day and night. If you guys would like to take it a step further and come join us in the trading community, link down below in the description of this video. I send out all of my alerts in real time every time I make a trade. We're also going to have a course coming out about trading, basically A to Z, everything you need to know, passive income, different strategies. It's all going to be in there, and you'll get it for free if you are a part of that trading community. It will be sent over on Patreon, or at least the links will be sent on Patreon, so whoever is a part of that at the time that does launch, we'll get that for free. So looking forward to that. Hopefully that helps out a lot of you guys. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.